Hey everyone, this is the Reckless Investor, or Marquise. So before the video starts, I want to explain the video. Wait, I normally don't do this until after the introduction, but this is a pre-introduction. But anyways, I am making a video, or you're gonna watch a video about domino. So I'm gonna have two helpers to explain about domino. One is Dominosaurus, and the other one is Papa Kong. Yes, I know they're Godzilla and King Kong, but they're battle of two titans. So here we go with the video to help explain about Domino's. Is it a better investment than Papa John's? They're both on the stock market, and let's see who wins the pizza wars. So take care, enjoy the video. Warren, my good old buddy, start us off, please.
The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are.
Hello everyone, this is the Reckless Investor. Today we're going to look at Domino's Pizza. Like I mentioned before in the introduction, we're going to have Kong of King Kong and Godzilla to represent each brand. Domino's will be played by Godzilla, while King Kong will be Papa John's. So what is Domino's? Okay, you hanging out with your friends or family, or friends and family, or by yourself. You don't want to make food, you don't want any other food, but you're in the craving for pizza. Where would you go? Papa John's, Domino's, or probably Pizza Hut. But you might choose Domino's. Domino's is a better stock, in my opinion, than the other one, which is Papa John's. But we get into it as we go into the clear picture evaluation. So Domino's is an operating pizza company in the United States and international. They sell other products than just pizza. They have other oven-baked sandwiches, pasta, boneless chicken, and wings, bread and dip, side dishes, dessert, and soft drink. There are roughly about 1,900 stores in 90 markets. But just imagine, as we're going through, hopefully this makes you hungry, of chowing down on some nice, tasty Domino's pizza. Okay, let's look at the trend and how it has been treating Domino's Pizza. So from the 52-week high, Domino's actually has been on a decline of 31.59%, and that lasted over 207 days so far. But however, almost 3 months now, Domino's has been on the increase or incline of a 20.56% rate. But what does that mean to year to date on your average return on your Domino's share? That's roughly a negative 5.52% return on your shares or your holdings on Domino's for year to date. But let's go over the clear picture. But doesn't that pizza look good? So let's begin. So a revenue comparison of Domino's and Papa John's. Papa John's has the ticker PZZA, and Domino's is DPZ. So how are we gonna tell? Is Domino's is blue, while Papa John's is orange? We can see that Papa John's has not increased their revenue or their sales that much since 2016 to 2021. They broke over 20 billion or 2 billion, while Domino's is over 4 billion, almost 4.5 billion dollars in revenue. Gross profit. We're looking at almost 1.7 billion dollars in profit for Domino's, while Papa John's still hasn't get out of the million block. They're almost at $8 million of profit. So gross profit to revenue. This is to show how much of the revenue is gross profit. And right now, in 2021, we're looking at roughly almost 40% of the gross profit came from revenue for Domino's. Papa John's is close, but no cigar. So what I'm going to do is I'm going to keep track of how many points that Domino's wins and how many points Papa John's win. And how many points that each company gets is how many times that King Kong or Godzilla will punch each other and be represented by this health bar above their heads. Whoever gets knocked out first loses, just like in Street Fighter. So net income, Domino's has pushed over the 50 million or $500 million range, while Papa John's can barely get over $100 million in net income. That's sad. They did take a dip in 2018 and 2019, and they have recovered. I give them a plus for that, but still the point goes to Domino's. So this is also another thing what we do is we find how much of the revenue actually is net income. And we see that Domino's in 2020 had their best year when it comes to see how much revenue is net income. That's roughly 12%. While in 2018, 2019, almost nothing was net income for Papa John's. That's sad. That's very, very sad. But boy, did they get wrecked. Point for Domino's. Okay, we now look at the free cash flow. The free cash flow for Domino's has been increasing since 2016 to 2021. That is good. On the flip side, Papa John's has not been increasing their free cash flow. 2019 to 2020, they did. But however, it is beginning to slow down and go down. That is sad. Point for Domino's. So again, we look at how much of the free cash flow comes from the revenue. And I'm going to just flat out say point to Domino's. Because you look at it, like the first, I don't know, 6 slides, Domino's has been the number one stock for both these pizza companies when it comes to their financials. When is Papa John's going to recover and be the number one? Don't know. But we see in 2016, they were hovering underneath 10% free cash flow to revenue. So roughly 10% of revenue was filled for free cash flow. But now, in 2021, they're over 12, probably almost pushing at 13% free cash flow was filled by revenue. While in 2020 was their best year for Papa John's, over 8%. But their decrease, that's not okay, right? Currently, they're under 6% of the revenue was filled for free cash flow. What are you doing here? I'm doing a video, Mr. Market. Why are you here? Go away. I can get Godzilla to send you out of here. Leave. Hey folks, hey investors. So if you don't want to see Mr. Market here, because Mr. Market helps himself only and gets you guys in trouble when it comes to the stock market. So the way to do that is to hit the like, subscribe, and comment a stock down below that you want to see me do. When you do that, I give you 5 seconds and it will kick Mr. Market out. 5, 4, 3, 2, 1. Oh, he's gone. Look at that. That easy. So, price to free cash flow, folks, remember, it is the sales or the price of the stock compared to the free cash flow. So, pretty much cash to cash. Simple as that. You can't fudge up the numbers to go your way if you compare cash to cash. So, you want that under 15 to be undervalued, but the fair value evaluation would be 15 to 20. 21 to 25, in my opinion, is overvalued, but it's very manageable. It's not going to affect the company that drastic. But anything over 25 is way too overvalued. But we can see in 2016 to 2020, Domino's has actually stayed in that range of 30 to 40%, not percent point. Wow, Papa John's is making a bird-shaped look on the chart. Because you can see from 2016 to 2018 is the one wing. From 2020 to 2021, it's another wing. But in 2020 wasn't actually the best year for either one of the companies when it comes to price to free cash flow. Because 2020, Papa John's was actually fair value. But now they're over 40. So that means Domino's is the best stock when it comes to price to free cash flow. Because 2019 is really screwed up Papa John's. They're over like 85 points. Alright folks, we're going to look at free cash flow. Yield. Free cash flow yield is simply, can they make free cash flow? Simple as that. It will show if the company has enough means to make free cash flow. And we see that 2016 to 2018, Papa John's was the best one when it comes to free cash flow yield. But a quarter way into the year, heading to 2019, the roles were flipped to 2019. Domino's was the best option when it comes to free cash flow yield. But again, they flipped again halfway through the year. Almost to 2020, and Papa John's was the best one in 2020. They're actually above 5 2 times. Wow. Domino's seems like they can't get past 3, or actually 3.5, because it seems like they hover around 3, but they can't really go that far past 3. But they come back to 3. I don't understand it, but right now, currently, they are the best option for free cash flow yield. So that's another point for Domino's. But here we go, folks. We have the first victory for Papa John's. So debt to free cash flow. On the left, you see 5, 10, 15, 20, 25. Those are years. How long a company has to pay off their debt with free cash flow. So in 2016, Papa John's was under 5. You want that under 5 because you want to look at a 5-year outlook of the past to help you determine the future of the stock. So 2016, they were under 5, which means they actually had enough free cash flow to cover their debt. But I don't know what happened in 2017 to 2019. They were on a giant rise of debt. So when you see an increase of debt to free cash flow from 5, that simply means that they're incurring more debt than free cash flow. So they almost are at 22 years to pay off their debt in 2019. And it seems like, again, Domino's is hovering around that 10-year mark. Yeah, they went over 10 2017, 2018, but they hover back under 10 in 2020. But currently, right now, Papa John's is the best option when it comes to free cash flow, or debt to free cash flow, excuse me. And they're hovering around probably 6 points. So right now, a point to Papa John's. But I'm not counting this one. I'm not saying that whoever has the best decrease is the winner. I'm not doing that for this one. In 2016, Papa John's had roughly 40 million shares outstanding. Now they're sitting at about 35. So they gained back or bought back 5 million shares. And the left side is in millions. So Domino's had about almost 50 million and they're sitting at 35. So they had a greater decrease or share buyback than Papa John's. So I'm not counting that against Papa John's. I'm not counting it as Domino's. But let's continue. Return on invested capital comparison shows that 2016, 2017, and 2021, Papa John's is the best option for you. While 2018, 2019, Domino's was the best option for you. If you look at return on invested capital, when you're looking at stock. And in 2018, 2019, those are bad years for Papa John's. They did not know how to reinvest the invested capital that you provided them back into the company in 2018, 2019. But you can kind of see that Domino's, it is on a downtrend, from 2016 to 2021. But the winner goes to Papa John's. So look at the return on equity, 2016 to 2018. Papa John's did not give you a return on invested capital, return on equity. While Domino's kind of staying flat, but it's still under 0. But this has to go to Papa John's. Because you look at it, 2021, they actually at closer to 0 than Domino's is. Domino's has not made really an effort to return on equity, have a better return on equity than Papa John's. But let's see where we lie with our price prediction. But first, 8 points go to Domino's, 3 points go to Papa John's. So the winner of the better stock to pick, it is Domino's. Domino's has a better financial numbers than Papa John's. But let's look at the price prediction. So my first DCF model of Domino's, I got a 96.23 cent fair value of Domino's. That is a large drop. That's roughly about 75.20% from where they're at now. But my second one is at 312.62. They're sitting at 587.989, I believe. But my fair value is $312.62. So not too far off, about 24.11%. But Benjamin Graham is saying that Domino's is worth $912.85. So let me rephrase that, $912. So Benjamin Graham thinks that Domino's should be almost a $1,000 stock. Mind blown. So if you put in my 65% share for margin of safety, I should buy it at $593, and I get a difference of 57.5% upside. But what does it mean? What does the value come to when you average all three amount? It comes out to an average price of $204.43. So I'm gonna wait until Domino's falls again and falls more before I buy either fractional shares or a full share if I can into the company. But wasn't that fun, folks? Well, thank you for watching. Every time you guys watch my videos, it helps me out a lot. And when you write down what I need to improve on in the comment, like add more videos, add more B-roll, add more pictures, it helps a lot. You guys have no idea how much it helps. Even though you guys have under 10 subscribers. To me, you guys are very important. You guys are family to me. And I rely on your guys' feedback when it comes to how to improve my video. So please share with friends, family. I don't care who you share it with. It can be a new investor, it can be an experienced investor. Please share my videos to help me to improve my craft and help me make the best videos I can for you guys. Yes, I'm getting a huge blessing from these videos that I make because I'm learning as I make these videos, but I'm learning more from you guys. Love you guys. Take care. And please help me keep Mr. Market away by like, subscribe, and comment down below. I really want to see you guys what stocks you guys want me to do next. I've been doing all these stocks that I have in my portfolio, but I really want to learn and look at stocks that you guys have or you guys are thinking or is on your watch. Please take care and have a good day. If it's day, but if it's night when you look at watching this video, have a good night. See ya.